Morning, everybody. So today, I know it's been a minute since I've sent out a video. It's in the middle of tax season or extension season, so things have gone. Been focusing more on tax preparation and pushing out information. But so today I want to do a quick video on a topic that I think as small business owners, we all have thought about this. We've all contemplated it. And we all probably do it to an extent. And that is, how do I hide income from the government? A lot of us do this by accepting cash payments for things. So this is kind of a aggressive tax strategy video. So at first, I'm going to say I will always recommend that we report all income to the government and then get aggressive on the expenses. That's always going to be my advice, even if you accept cash payments. Now, if you are going to accept cash payments and not report it as revenue to the government, you at least have to be smart about how you do that. So I guess this would be a theory video instead of actual tax advice video, because again, my tax advice is we report all income and get aggressive on expenses to lower taxes, not hide income. But if you're going to, make sure you're doing it the right way. So first off, if you get cash, you can't put it in the bank account because now you've created a paper trail. And in an audit, when they're looking through your bank statements, they're going to ask, well, explain what this deposit is, where that came from. And if you can't, they're going to, the IRS, what they do is they assume everything is taxable income until you can prove otherwise. So that can be an issue for, like, if you're just transferring cash from a personal bank account and you put it in a business bank account, they're going to instantly assume that is income, taxable income, except that then they can see that it's coming from your personal bank account. So, for example, a bad thing to do would be you get a cash gift from, let's say, your mother for your birthday or something, and you go, hey, I need money in my business bank account, and you deposit that cash in your business bank account. The government in an audit is going to assume that's taxable income because you just put cash into a business bank account. What you need to do is put the cash into your personal bank account and then transfer it. So keep that in mind, like any cash deposits that have no proof of where it came from is going to be considered taxable income in an audit automatically. No changing it, no negotiating. It is instantly taxable income in an audit. Okay, so if you get cash, don't put it in your business bank account. You have to keep it in the form of cash. So, well, what do you do with this cash? Don't use it on business expenses, because if you accept cash, don't put it in your bank account so we don't report business income, and then you turn around and use that same cash for a business expense. That means that is a business expense we now can't include in your books. So this whole tax evasion strategy just net to zero because you lost an expense and you lost the revenue. So you have to make sure you use that cash for personal transactions. Well, we get very aggressive on business expenses. So what does that mean? Gas is a business expense. Home utilities is a business expense, right? Home rent, all these things, your gym membership, your perhaps the clothes you're buying, perhaps the food you're buying. So there's depending on your type of industry and how aggressive we are on expenses, there's a lot of stuff that you could spend that cash on that's really just going to net to zero because it was a business expense already and you just took it away from yourself by buying something in cash. What a lot of people will do is they like to put gas in their car for cash. They get the cash, they don't report it as income, and then they put gas in their car using that cash. Well, you just lost a business expense because you did that and you net to zero. And what's going to happen is if the IRS actually found out about that, they're going to hit you with tax evasion, substantial underpayment penalty, and they're going to say that cash was revenue, but you don't get the expenses. And so it's, I mean, it's not a lot of risk, but it's you're still carrying some risk and you're not getting any benefit. So you have to make sure you use the cash strictly for a personal expense. So that might mean your spouse, who isn't included in the business at all, is you buy her gas or his or her gas with the cash. I'm going to tell you, I get aggressive on that too, because there's a lot of times I will buy gas for my significant other, and it goes on the business card when I do. So that might be something to consider. If you're going to go on a vacation, use the cash to book the hotel or pay for the hotel. I don't know if hotels even let you do that anymore. Maybe use the cash to buy souvenirs, or pay for golf or other types of entertainment type things, which aren't tax deductible regardless of how you pay for them. Entertainment is never tax deductible, so buy the concert tickets with cash if you can, or the fair tickets, or a carnival tickets, or that's the type of stuff you could really, or pet supplies. Dog food, very, very rarely. I don't think we write off any pet supplies for anybody. So buy your dog food with cash, pay the vet with cash. Those are things that are personal that you could spend that money on and actually benefit from your tax evasion strategy. But again, you're going to do it, at least make sure you're not spending it on business expenses. My recommendation is we report all income, even the cash, and then just get aggressive on your business expenses. Much, much lower risk that way. Anyway, that is my quick 5-minute spiel for today. Hopefully this helps everyone as they think about how to get aggressive on their own taxes. Thank you and have a good day.